For most of us, when we think of financial planning, we think of saving up and investing so that we can one day retire. Now, there's a lot more to consider in financial planning than just investing. There's also the impact of tax. That's one of the biggest factors that people don't realize is how much goes into tax a year. Between your property tax, your tax buried in the goods you buy, fuel taxes, and of course just income taxes. The subject of tax can be quite a complex one, and obviously it's not like you can avoid tax. Tax is there, but you can spread out the impact of tax over your lifetime. And there are certain products and certain accounts that will give you a better tax outcome. Tax is a complex subject, and as you can see from the size of the Income Tax Act, it is also very overwhelming. Other confusion in financial planning comes from the variety of investments out there. You could invest in GICs, stocks, bonds, mutual funds, exchange-traded funds, segregated funds, permanent life insurance products, real estate trusts, venture capital, even gold bullion. So what is the best investment? And then there's questions like, should you invest in an RRSP or a TFSA? What kind of risks in life should you cover with insurance? And what is not worth the insurance cost? How much do you actually need for retirement? If I was to give you a silly analogy using archery, financial planning can often feel like trying to shoot a target with an arrow after putting together the bow blindfolded. It can be quite a disaster. So where can you go for financial advice? Most financial institutions and banks work on a commission basis. That means when you come in for financial advice, they look at your situation, they look at what products they can offer that would best fit your needs, and then they will give you time and advice according to how much commission they will get. In the case of a mutual fund, for instance, often the bank will take 1% as an advisor fee, and then there will be the buried fees in the mutual fund themselves for the portfolio managers running the fund. So if you have $100,000 invested in mutual funds, then you're looking at $1,500 to $3,000 in fees annually. If you're more of a do-it-yourself kind of person, you can go to a discount brokerage and buy stocks directly and definitely reduce your fees that way. Often it's more like a $10 a trade kind of fee. You still need to get your financial advice somewhere though. Now you could go ask your accountant, but often people wait too long. They come in with their taxes to be filed and then they ask their accountant questions. No, you need to ask ahead of time. This brings me to another option that has gained more traction lately, and that is fee-for-service financial advice. You pay for the time that you see an advisor, and it's not product-driven. Think of me as more of your financial coach. I will give you practical recommendations based on what you have told me about your situation, and I will inform you about the different options out there. You're still in charge of your financial plan and hitting the target, but I'm there to help you along the way. And don't feel bad if you do not buy any products from me. Going back to the archery analogy, I'm the one who shows you the better tools for the job, who shows you the techniques in order to better hit the target, and who helps you keep your target clearer in your mind so that you are not distracted. If you would like further information on my services, check out the link here or email me at chantel@taxinformedplanning.ca.